I'm Julia Borston here in Sun Valley at the Allen & Co. conference, and I'm joined now by the CEO of Yahoo, Jim Lanzone. Jim, thanks for joining us here.
Great to be here.
You've been CEO of Yahoo since 2021 when Apollo took it private, and you've been credited with turning around the company. But we don't have financials, so we don't know exactly what's going on. Walk us through, other than layoffs and streamlining, what you've done to transform Yahoo.
Yeah, I mean, if you think about September of 2021, it was the middle of COVID. We were spinning out of Verizon, so we actually had to reestablish the company. We had to completely restructure how we operated, bring in a new team, redo the entire revenue model. And that was even before, the launch of AI and everything else that came along with it. So there was a lot of structural work to getting Yahoo back up and running. And then, of course, the other side was getting our products going again and building great new versions of all of them. Improving how we monetize Yahoo over time, and so it's great to be private, for a while as we have gone through all those fixes. But we're through a lot of that, and we're on a really good track now.
So when you say improving how we monetize, advertising is obviously Yahoo's bread and butter, but explain to us the changes you've made.
Yeah, well, the biggest one was that historically, or at least for the several years before we took over, there was one ad tech stack internally that was essentially just programmatic. And we weren't able to play the field to bring the highest yield to all of our pages, beyond moving more into subscription, leaning back into search, other ways of monetizing. So we actually had to offload some of our old ad tech properties, our SSP, our native ad business, and lean strongly into our DSP, and reestablish a sales force for the first time in many, many years. So directly selling premium ads. And so all of those things collectively have, increased how we monetize our pages.
And your key verticals, news, finance, sports. How are you approaching those?
Yep.
And can you imagine launching another vertical?
Definitely could imagine a new one, but between sports, finance, email is still huge for us. Search, we're still top 3 in search. So we're number 1 or number 2 in all those other categories. And so those have definitely been a focus. We've relaunched every one of those over the last 9 months, so there are brand new versions of those. So we're re-engaging our audience in all kinds of new ways. And if you think about Yahoo's history as the trusted guide to the internet, going back to 1995, we have our 30th anniversary this year. We have leaned back into that original mission and reimagined what that means. So that could lead us into other categories where that could also be true.
So talk to us a little bit about your M&A strategy, because you've sold some assets like TechCrunch, but also acquired the likes of Artifact, which is a news app that was founded by Instagram founder Kevin Systrom. What are you doing in terms of M&A, and what have you done so far, and what's next?
Yeah. Well, in going back to our mission of being the trusted guide to the internet, what it really meant was, we inherited a lot of properties that were breaking news and doing first-party reporting, where the real history of Yahoo is as being an aggregator, helping publishers, sending traffic downstream, helping them monetize. And so in properties that we have moved out of, TechCrunch was one, Rivals is another, a place where we have really leaned in is our news aggregator, our news app. So we bought Artifact, which was a pioneer in many ways in ML and AI in the space. The Instagram founders decided that they did not want to operate that anymore, so we moved in and really made that the backbone of the new Yahoo News app, which is been on fire lately. So.
And so who are you competing with, though? Because there's so many options right now. Consumers get their news from TikTok. They get their news from ChatGPT.
Yeah.
Why would a consumer right now go to Yahoo News instead?
Yahoo News is the number 1 ranked by traffic news property on the internet. I think people lean into it because it's a great aggregator. When it comes to our other properties, finance, sports, we do the same thing. We also will add context with original content. And that includes things like podcasts and others. We now do 50 hours of original programming a week on Yahoo Sports as one example. But so that is what they come to us for. They trust us to sift through the internet and bring back premium sources and help them find what they're looking for.
So who do you see as your main competition? Is it YouTube? Is it TikTok?
I think, look, we are still, after 30 years, top 5 in traffic in the US, top 5 globally. We're even now top 5 with Gen Z. And so by that measure, you're kind of competing with a lot of people. It's the same way Meta has Facebook, WhatsApp, Instagram, Yahoo, or Google has Google, YouTube, Android, many other properties. We have a lot of properties. They all add up. And so we compete in our verticals with different properties. But Yahoo overall is not itself one thing that competes head-to-head with anybody.
So you made some big news at Cannes Lion announcing that you're partnering with Netflix to help sell some of their ads. Explain to us that partnership and what that says about what your ad sales strategy is going to be going forward.
Well, so on the one hand, our ad sales strategy, once again, for the first time in 10 years, we just had our first new front in many years, is to sell directly. And so we've stood up a sales team to go do that. On the other side of it, we have the world's largest private DSP. So in that category, we compete with Trade Desk, Google DV360, Amazon, and others. And it's where people come to access programmatic inventory across the entire internet. Yahoo's only a portion of that inventory, and the Netflix announcement was that we added Netflix CTV inventory to our DSP.
So what are you seeing right now in terms of the ad market, though? We've just seen WPP shares plummet down 16% on their second warning of the year. A lot of concerns about tariffs and geopolitical uncertainty weighing on ad sales. What are you seeing right now?
Well, certainly with Liberation Day and that time period after that, it got a little wobbly. Places like the auto category, for example, CPG categories, we saw a little weakness. But look, one of the pluses and minuses of what we're doing is it's a turnaround. And so everything for us has been kind of up and to the right, even into declines in the market for others who are already at their peak, we're rebuilding. And so the good side of that is that we still have growth even as the market has some challenges.
But are you seeing an uneven market or a patchy market? What can you tell us about what's happening right now given all the tariff news?
We saw a strong comeback after the initial first month. So in May into June, we were all at Cannes Lions, and the view there was pretty optimistic. So we continue to see growth. And so can't speak for everybody else, but we've definitely seen that on Yahoo.
And when you're competing at somewhere like Cannes Lion for ad dollars with the likes of Amazon, which is really building its ad business, and Meta and Google, what's your argument to advertisers about why they need to be on Yahoo 30 years in?
Look, we offer true performance at actual true scale. Most people have one or the other. And the great thing with Yahoo is going back 30 years, we have a first-party relationship with most of our users. 75% of our impressions are from logged-in users. And so what that means is whether you're buying directly or buying through our DSP, we convert better than anybody else. When in head-to-head tests, we win 90% of the time. So we actually just need to get people in trialing Yahoo again as an ad buy. And it's really hard, after all this time, for people to find this kind of scale where the inventory actually performs to convert.
So you're competing with those companies, though, not just in terms of ad dollars, but also in terms of talent. And there's a lot of conversation here about the AI talent wars. How do you compete for employees when you're going up against the Metas and OpenAIs of the world?
Yeah, more narrowly. So we're a smaller company than any of them. We're not building large language models ourselves. We have launched AI products in everything that we operate. It could be fantasy sports, it could be Yahoo Mail, the Artifact app, all of those things. And we have plans for more things to come. What you find in a project like this is that the early days, it's harder to recruit. As you get your team, as you wind up getting your A team together, which we now have, it gets a lot easier. And as an example, we today only hire one engineer. We have 1,000 applicants for every one position that we hire. So Yahoo is in demand again, even after 30 years.
So what's your AI strategy then? There's so many giant players here. Are you trying to create your own LLM? Are you partnering with LLMs? Walk us through it.
We're partnered with almost every LLM. So if you're in Yahoo Mail, there's all these different features that help you to be more productive in Mail. If you're in Yahoo Fantasy Sports, it's helping you set your lineup. In Yahoo Finance, it's helping you make more money. In Yahoo News, the Artifact aggregator is built on AI and ML to help make recommendations, personalize better. So we've done it product by product. I don't think you'll see a company of our size wading into the LLM market. But that said, I think there are people who have been successful, partnering with those companies and adding unique value to that. I worked my first 10 years in search myself and have a lot of experience with that. And I think we have ambitions for what we might be able to do for our users going forward there.
So what is that ambition? How will AI change Yahoo in the next 2 years?
Man, it's already changed everything. I mean, it's every product that we operate has AI built into it very deeply. The only question would be, what can we do going forward? We really believe in the open web and having healthy publishers on the other end. And I think the entire AI search framework so far has really been almost research focused and user focused, and not really as pro publisher, and even the advertising side has not really been proven out yet. I think we'll have some things to say about that we think will be really helpful for sending traffic downstream and helping publishers monetize downstream.
So you're partnered with all the big LLMs, but what about M&A? You've done some deals. What's on your agenda in terms of M&A, and are you talking to any of the startups here in Sun Valley about maybe buying them?
Some of the startups in Sun Valley are worth more than we are. I mean, you have some that are already in the hundreds of billions. We've been product by product to date. We have not done acqui-hires. We've done, can it fill a technology or a product need that we have that could make up for lost time? So those have been the deals that we've done so far. We have actually looked at some, up to buying public companies for adding verticals that we don't operate in yet. We just haven't found, the right deal. Coming out of COVID, there were some pretty frothy prices that we kind of wanted to, take a little bit longer with. But we are, ambitious for what we might do on the product side, leveraging AI, and I think M&A could be a part of that strategy, but nothing today.
And what's the long-term plan for Yahoo? Are you going to go public again?
Well, I think every pre-IPO company, and I think it's weird to think about it, if Yahoo's one of the granddaddies of the internet, to think about it as a pre-IPO company again, but that's what we are. We spun out as a very large, very profitable, with doing a lot of revenue and top 5 in users. If it wasn't named Yahoo, the question would just be like, are you going public, or is someone going to buy you? And I think it's the same thing for Yahoo today. Like that is the position any pre-IPO company is in. You're not going to want to stay private forever. But for today, we have so much that we can do to add value to where we're at that it's not bad to be private for a while longer.
So what's your timeline if you were to go public?
I mean, I think anybody would say they'd want to be to the finish line tomorrow, but I think for taking our time, for getting this right, there's so many we just came through phase 1, in my opinion, of launching way better products. We did that in every category we operate in, but that's just phase 1. I mean, there are 10 to go. And so we just think it's premature from a valuation standpoint for where we can really get to.
Great. Well, we appreciate you taking the time to talk to us today. And we'll be waiting for Yahoo's second IPO. Jim Lanzone, CEO of Yahoo, thanks for joining us.
Julia.
I'm Julie Boorstin here in Sun Valley at the Allen & Co. Media Conference.